Welcome to The Explainer. So, when a giant like JPMorgan talks, everyone tunes in. But what's really telling isn't just what they say in their prepared remarks, it's what Wall Street asks back. And that's exactly what we're digging into today. We're jumping straight to the Q&A from their latest earnings call to see what analysts are actually worried about.
And honestly, what better place to start than with this little gem from CEO Jamie Dimon? I mean, wow. He dropped this line during a talk about risk, and it just perfectly captures the whole vibe, right? On paper, the quarter looked great, but there's this feeling of anxiety just bubbling right under the surface.
So to really unpack what he meant by that, and everything else on Wall Street's mind, we're going to break it all down into these 5 key themes. We'll hit the economy, credit quality, that one cockroach problem, AI, and of course, what's coming down the road. All right, let's get into it.
First up, the big picture, the state of the U.S. economy. We've seen some surprisingly strong data for months now, and analysts were basically asking, okay, this is great, but can it actually last? Especially when it comes to the American consumer.
You can imagine, they really put the pressure on JPMorgan here. The big question was, are these positive trends we're all seeing sustainable? Or are we standing right on the edge of a tipping point where things could start to go south pretty quickly? And this is where it gets really fascinating. JPM's CFO, Jeremy Barnum, he painted this picture of two realities. On one hand, he's like, look, the facts are the facts. Consumers are spending, and fewer people are missing payments than we expected. But then, he throws out this phrase, a low hiring, low firing moment. Think about that. It means employers are hesitant. And that's the key risk, isn't it? If that job market starts to crack, the whole consumer picture could change fast.
Well, that uncertainty leads us right to our second theme, because analysts started digging deeper. If the consumer is okay for now, where else might trouble be brewing? They started poking around, looking for the very first signs of cracks in the bank's massive loan portfolio.
The question really boiled down to one thing. Is the quality of their loans just returning to normal after a few weirdly good years, or is it starting to genuinely get worse? Are we just seeing normalization, or is this the beginning of something more serious? And check this out, because there are really two totally different stories happening here. On the consumer side, things look great, even a little better than expected. But then you look at their wholesale credit. We're talking about loans to big companies and institutions, and that's where you start to see things change. They're seeing a few, let's call them unique, one-off problems starting to pop up.
And when they say unique problems, they mean stuff like this. A single charge-off of $170 million. And it came from one specific instance of what looks like fraud. So this isn't some vague trend. It's a real, concrete hit. And you better believe that gets analysts paying very close attention.
And that one specific problem brings us right back to Jamie Dimon's warning. This is where the questions on the call got really pointed, as analysts zoomed in on the risks coming from this huge and kind of murky part of the financial system.
So, just so we're all on the same page, we need to talk about NDFIs, non-bank financial institutions. You probably know them as shadow banks. Think private credit funds, hedge funds, all these firms that lend money but aren't regulated like a traditional bank. And in the last few years, they have gotten absolutely enormous.
So of course, one analyst just cut right to the chase. How exposed is JPMorgan to this sector? How much risk are you taking by lending to these shadow banks, especially when we've seen some of these other firms collapse recently? It's the elephant in the room.
The CFO, Jeremy Barnum, he answered first. And his response was pretty calm. He was basically saying, hey, look, we're careful. Most of our loans to these firms are highly secured, and we follow our normal, tough standards. For us, this isn't some huge, elevated risk.
But then, Jamie Dimon jumps in and completely changes the tone. He says that when things like that fraud case happen, his antenna goes up. And then he hits him with that memorable line. He's making a crucial distinction here. He's saying, yeah, we feel secure in our own business, but that one event, that's a warning sign that there are probably more hidden problems out there in the system.
Okay, so let's shift gears. We've talked about the big external risks. Now let's look inside the bank itself. Analysts turn their focus to JPMorgan's own playbook, how they're managing costs, investing in tech, and what on earth they're doing with their massive pile of excess capital.
You knew this question was coming, right? AI. It's on everyone's mind for every company. Is all this hype and all this investment in artificial intelligence actually going to translate into real, measurable cost savings for a financial giant like JPMorgan?
Now, JPMorgan's strategy here is actually kinda genius. Instead of getting bogged down trying to prove every single dollar of AI savings, They're using their belief in AI's power to enforce discipline. It's like they're telling their managers, listen, we know AI is making you more productive, so we have a strong bias against you hiring more people. It's a clever way to keep costs in check.
And when it comes to all that extra cash they're sitting on, the answer was basically all of the above. They're putting it to work, lending to the real economy. They're buying back some of their own stock, though they admit it's not a great deal at these prices, and they're thinking about raising dividends. It's a classic balancing act.
And for the final big topic, the conversation turned to the future. Specifically, the changing regulatory landscape coming out of Washington, which could end up rewriting the rules for every big bank out there.
With new people in charge of regulation, analysts wanted to know what to expect. There are major new rules coming, especially a big overhaul called the Basel III Endgame. So the question is simple. Just how tough are things about to get?
And you know, JPMorgan actually sounds kind of encouraged. They seem to think the regulators want to be practical and get the math right on specific risks this time. But Jamie Dimon did not hold back. He was emphatic, urging them to fix the unintended problems from past rules and to be honest about financial models that he says are, and this is a direct quote, not remotely related to reality.
And that really leaves us with this final thought, doesn't it? You've got one of the biggest banks in the world on high alert, scouring for hidden risks, for cockroaches. But the bigger question is whether the regulators are actually rewriting the rules of the game to build a system that's just inherently safer to begin with. And that really is the key takeaway from Wall Street's questions this quarter.